Good morning. In today's class, we are going to see about indirect taxation. So, indirect taxation. Tax. What do you mean by tax? A tax is a compulsory contribution from the person to the state to defray the expenses incurred in the common interest of all without any references to the special benefits conferred. So it is an individual, he has to pay this compulsory contribution for the wealth of the person and also to the service to render to the public power. Tax system in India. So tax system in India. So Indian tax system has been unorganized, unregulated, and unplanned due to historical reasons. So in ancient days, there is no tax the people to get the benefit of their coffers and also to the luxurious to the state. So land revenue was their major part. So to earning income to the society. So other taxes used to levied an ad hoc basis. So in the British rule, what has made is no effort was made for uniformity in this tax system. So vast difference were there between the tax policies by the kings and the British provisions. So social justice, welfare, economic development, and all these peoples were not linked to this tax systems. So after that, the Indian Constitution, what they had is they came into effect from 26th January 1950. It is to give a clear distinction in made between sources of revenues of union and also union and states in which the powers belongs to all is in this center part. So the Constitution in the Supreme India and it is has source for all laws and the union and states derive the power to levy and collect tax from the constitution. So after this act has been enacted, so they made the compulsory condition that union and state has to pay and they have the power to levy and also collect the tax from the constitution. So if any law or rule of the government is not according to this constitution, it becomes illegal and void. Classification of taxes. In classification of taxes, we have first one direct and indirect taxes. So a direct tax is one which is really paid by a person on whom it is legally imposed. So the individual who has the income and who has all the sources, he has to pay the tax on own in his persons, whereas in indirect tax, which is actually imposed on one person but paid partly or wholly by another person. So the tax may be posed on some one person, but the payment can be made partially or wholly, or it can be shared, or it will be shared by the. Next is specific duties and ad valorem duties. Specific duties are levied on the basis of physical attributes, which is like length, weight, volume, etc., and like commodities. So, for example, we have duty on cloth based on length in meters. So, it is measured just like that. They cannot post a tax on cloth. So, they need the quantity which they hold for that particular quantity tax will be posted. So sugar on the basis of weightage, it is called specific duty. So specific duties are levied on the physical attributes, on the product, physical product. The tax is levied on the physical products. So next is ad valorem duty. Ad valorem duty is nothing but it is the value according to the value. So value has been identified. So duties will be posed on the values which has been value of the product. Based on that value, duty tax percentage is fixed. Next one is progressive, proportional, regressive, and degressive taxes. So, proportional taxation. So, it is a tax system in which the tax remains constant, irrespective changes in the tax base. Whatever may be, the government can change the economy can change the tax base, but even though the proportional taxes there cannot be made any changes, it remains constant. So it is an uniform rate and it is followed by the tax payable and it is a steady process. Next is progressive taxes. It is the rate of taxation which increases as the tax base increases. So whenever the tax base increases, this progressive tax rate which also increases. So this progressive tax ensures that it is the distribution of tax burden and it is based on the canon of ability to pay. So based on the ability to pay, it has been identified. Next is regressive tax. Regressive tax is one where the rate of tax decreases as the tax base increases. Whenever this tax base increases, this regressive tax rate will be reduced. The rate of tax decreases so for higher incomes. So when the income rises, this regressive tax will be reduced. The amount of tax payable increases in absolute terms. The decreasing rate of tax eases the tax burden for higher levels of income. Next is digressive taxation. So it is one where the rate of tax increases up to a certain limit, and after that the rate of tax is constant for further increase in income. So this system may be also called as the mixture of proportional and progressive tax system. So higher income group make lesser sacrifice in this method, so compared to lower income groups. So it is an advantage of this test. So disadvantages on grounds of equity economies do not agree with this principle underlying this method because it is imposed to only a part of your people. So they are benefited with this tax. So other than those peoples, others will have been affected. So it is called digressive taxes. Next is single tax. It is single tax and multiple tax system. So single tax is a kind of tax, only one kind of tax. It implies tax on one thing and one class of things or one class of people. So it is collected regularly and at periodic levels. So a single tax denotes the only tax, exclusive tax on the one class of things. It can also be posed on all expenditures and the incomes and land possessed or house possessed. Still, it is a one thing of tax, only one tax. It cannot be differentiated. It is a single tax. Multiple tax. Multiple tax system means a tax system comprising several types of taxes. They may include both direct taxes, indirect taxes. In such a system, every class of citizens may be called upon to contribute his mite towards the state revenues. So this multiple tax system generally results in equitable tax burden since it is composed of direct and indirect, proportional and progressive. So it is difficult for individuals to evade taxes altogether. So when there is a multiple tax, when all the taxes come under one head, actually it is a difficult process to identify all those taxes and to calculate the tax rates. So it makes quite uh, difficult to prolong with that. So people of all income groups can be reached and taxes can be made according to their ability to pay. So all group of income have been identified here. So based on the income groups, income levels, this tax can be imposed. So each and every person in the society will be identified and the respective tax will be made. So it is an easy way to reach everyone. So what is the part of the government? So government can collect sufficient revenues to meet their growing needs to the society. So they have the easy way of in single line they can make a more number of revenues, and they can also pay the needs, growing needs too. They can spend the revenues to the society and the economy to meet their expenses. Though this system satisfies most of the canons of taxation, such as elasticity, diversity, flexibility, and equity. So, most of the canons of taxation, the priority of the payers. So, based on that, it has been fixed. If the tax rate depends and it has the diversity, it has a multiple rates and it flexibility, it adopts the particular type of people, and it is an equity. Not only based on all the sources of the individual, the rate has been identified, and also it has been a diversity, flexibility, elasticity. So this tax system becomes broad based and covers every sector in the country. So the major aim of this multiple tax system is to reach each and every person in the corners of the society economy, that is a country, so that all the persons who earns income can pay their tax without any problems. So it is more useful for to achieve social and political objectives. So based on that, when we collect those revenues, these are the only thing where we can meet the each and every individual and to pay their tax, and with those revenues we can meet all our expenses. Next is goods and service tax. So this normal a tax has been modified into goods and service tax. That is the GST, which now we are all surviving in this GST. So G stands for goods, S stands for service, T stands for tax. So it is a tax levy on manufacture, sale, and consumption of goods and services at a national level, under which no distinction is made between goods and services for for levying of tax. So for this, the origin of GST is tracked back to July 17, 2000, that the government of India has to set up this empowered committee of state finance ministers and all the honorable state finance ministers in the uniform sales tax rates, phasing out of incentive schemes, switch over to VAT, reformation of CS. So VAT, value added tax, reformation of CST, central sales tax system. So identifying these two taxes, they have modified and made the amendment for the GST. So it is the comprehensive tax which has been levied on manufacture, sale, and consumption of goods and services. So a person who is a manufacturer and who is a seller or who is a consumption of that particular goods has to pay this GST. It is a tax on goods and services, and which every person is liable to pay tax on his output and entitled to get input tax credit on the tax paid on its inputs. So, what is this actually GST stands for? So, goods and services which is sold for domestic consumption, and the GST is paid by the consumers to remitted to the government by the business selling and goods and services, which provides the revenue for the government, and ultimately it is borne by the consumers. So in worldwide GST, every country has their own percentage of rate of GST which has been imposed. So what are the enactments of GST bills? So on 12th April 2017, the central government enacted four GST bills. First one is central GST, that is CGST. Next is integrated GST, that is IGST. Union territory GST, UTGST. Next is bill to compensate states. So for all these four enactments, that is for GST bills, they have to make approval for GST bills. So in short period, all the states approving this state GST, union and territories and their legislatures have adopted. Comparatively, Delhi and Puducherry have adopted this SGST Act, and the balance five union territories without legislatures have adopted UTGST Act. So comparatively, the central state GST has been also accepted and also adopted this UTGST. notifications of GST rules. So the government has also notified this GST rules, tax rates on goods and services, exemption list and categories of services on which reverse charge is applicable. So this GST rate has been this notifications which has been made mandatory in this Council of GST has been revised on every time on the framing of the budget. So now we have the budget minister, so they have the right to change this GST on every year periodical plan. So migration to common portal. The second phase of enrollment process for this taxpayers and to the proposed tax regime through this GST common portal has already commenced. Next, return filing procedure for the first 2 months of GST implementation is relaxed. Tax would be payable for the first 2 months and based on simple return form, that is GSTR 3B, containing a summary of outward and inward supply. So if a person wants to file this GST, file GST, or if he needs to pay the tax, what he has to do is he need to go to this GSTR, that is applicable one, not for every person. It is GST is only for the manufacturers, sailors, and the persons who consume the source products and services. So this form is required to be submitted before the end of the succeeding month. So what are the effects of GST on economic growth? So we have financial super in the year 2016. The authorities approved the GST legislation to simplify the current multi-layered federal, state, and local indirect tax structure. So the GST bill will unify at least latest 10 types of indirect taxes into one tax to be collected at the state and federal levels. So, under the existing structure, each point of sale additional taxes are implied to the after tax value of each goods and services. So, the main purpose for the GST is to eliminate this compounding effect by fixing the final tax rate, where goods will fall into one or four rates categories. So 5%, 12%, 8%, 18%, and 28%. So the effects which has been made on this after implementing this GST, that is on Indian economic growth. First point is financial superpower. So in order to make India a financial superpower, the introduction of this GST is made mandatory and the urgent step has been required. So there is much apprehension regarding to proposed GST regime concerning the growth in Indian economy and its efforts. A known destination-based taxation requires high compliance cost and efficient administration. So vital role of GST. So taxation both in the form that is direct and indirect plays a vital role in promoting the economy and the equal distribution. So when there is a cascading system of indirect taxes. So introduction of GST, all this cascading effects of indirect will be completely removed and the chain effort has been promoted from the producer's point and the retailer's point. Moreover, all the major central and state taxes will also be subsumed in GST. So when a person he has to import or export his goods and services, there are more charges and more taxes levied on those, and that makes a major cause of increase of prices. So that those making of charges are called as cascading charges. So this cascading charges can be avoided or completely removed through the through the adoption of the GST. So GST what is made is it has clearly mentioned that only the particular portion of goods and services or particular thing you have to pay a particular rate of interest. Other than that, there is no rate of tax you need to pay other than the rate fixed by the government. So the person who is seller or buyer or manufacturer, whoever may be, he can avoid the extra amount and the extra taxes, so that the product price of the product will not be increased drastically. There will be the control in the price when we avoid the unexpected charges. So next, third point is destination principle. The structure of the GST is based on the destination to reach the point. So where it starts and where it has to be in. The both will be fixed by this GST. So in middle of the thing there will not be made any changes. If there is a change, it has to be reduced or removed from the line. So the starting point and the destination is decided by the GST, and it has been fixed. No other charges will come in between that particular product. So the tax base which has the shift from production to consumption, whereby imports will be liable to tax and exports will be relieved on the burden of the goods and services. So international levels, state levels, central levels. So all exports will be ought to be at the zero rated. So based on the thing which has been imported or exported, the rate will be fixed. On next, the imports should be subject to both CGST and SGST, that is central GST and state GST. So at the time of importation. So irrespective, not the imported goods are produced domestically. Moreover, GST will redistribute the burden of taxation equitably between manufacturing and services. So the tax rate has been fixed based on the international, based on the central, based on the state. Moreover, it also has a categories of goods which has been manufactured for domestic purpose, and where goods which has been um, manufactured or service provider, with it based on the qualitative. So based on the services regarding the product, the tax rate will be fixed. Based on the promotions and the nature of the products and goods, the tax rate will be lower according to the tax rate and maximizing their exemption. They can make their exemptions according to the products. Next is common market. The greatest impact by implementing this GST, we have a common market across the country to reduce the cascading cost, to have a equitable distribution. So, in the fiscal options, we have a policy to attract investors and to shift the greater structural reforms, the macroeconomic effects of reduction in economic distortions due to GST. So all these markets which has been ruling our country in a drastic way. So after this implementation, common market has been made to every people, though they were the micro market or microeconomic to a variable markets. This GST has made a mandatory rule that all the rate fixed is commonly fixed. It cannot be changed according to their thing. So after implementing this, it has made a proper economic growth, and it is also expected that the employment opportunities for all will be enhanced. So making this tax rate common to all people, it is an also an another way for the unemployment people or searching for new employees. They have a good range of way for the finding of their employment. Next is efficient allocation of factors of production. So this GST has been lead an effective allocation factors of production, which lead to gaining GDP and exports, mainly concentrating on exports. Whenever we do an exports, it enhances the economic welfare and it returns to the factors of production, land, labor, and capital. We make a lot number of efficient sources, and that also reduces this unemployment problem. So the lead to the gain in GDP, gross development program, we have a major range, and they target to increase the GDP increase the GDP, so that through the exports, so that we can earn more revenue. So revenue, based on the revenue, we can solve many of the problem in our society, gains the GDP. So, the implementation of GST across goods and services expect to provide gains to India's GDP, somewhere with a range of 0.9 to 1.7 percentage. So, the percentage rate, when there is an, in earlier stages there was an VAT, so value added tax and normal tax. So, in that, through that VAT, we could have we could have not aimed our GDP. So after implementing this GDP, sorry, GST, our GDP has been, the GDP percentage has been raised from 0.9 to 1.7. The economies of scale, the manufacturing sectors would benefit from the manufacturing sectors, which benefits from the economies of scale. So outputs of sectors, including this output sectors: textiles, ready-mades, garments, minerals, coal, petroleum, gas, iron, organic, heavy chemicals, industry, machinery, food, textiles, beverages, miscellaneous manufacturing is expected to increase. So this economies of scale, which concentrates on all these products, which has an increase option. The sectors in which output is expected to decline is natural gas, crude, petroleum, iron, ore, coal, tar products, and non-ferrous metal industry. So we do not have that much of demand for this product. So in that we lose some economy. That is, the scale has been reduced, but we have a major source where we can increase our economy of sale through the products which we use in our daily which we use in our daily life. Fall in tax evidence. So, the 13th Finance Commission chairman, what he said is, he said that the proposed GST would benefit the Indian economy by at least 15 billion, that is about 73,000 crore per year. A fall in tax incidence on goods and services offered would enable producers to sell their products at a lower level, leading to increased demand. So after implementing of this GST, the tax rate has been drastically reduced, so that we can reach the each and every person in the economy. Rational tax system. This rational tax system, which leads to lesser disruptions to the market economy and more efficient distribution of resources within the industry. GST implementation. It is an important role in the growth of Indian economy. So after the GST implementation, we have made a large number of revenues to the country, so that the all the goods and services, except alcoholic liquor for human consumption, for the levy of goods and service tax. So based on this, the tax has been levied. In case of petroleum and petroleum products, it has been provided that the goods shall not be subject to the levy of goods and service tax till a date notified on the recommendation of the Goods Service Council. So there has been a categories where this GST can implemented, and the benefits has been uh, re- uh, benefits has been enjoyed by the government and also the consumers. Thank you.